Apex Investor, the channel where we like to make the stock market into something simple. Simplify the stock market. That should be our slogan. Big winner today, or big loser, I should say, is CIFR, negative 22%. Big winner, PTGX, 93% gain. Okay. Ending stocks, actually HYLN, HYLN, which is I believe to the EV market. This stock has really collapsed. This could be a really good buying opportunity. It's actually broken support. This was as high as in the 50s back in October of last year, I believe, September, October of 2020. But in the last 52 weeks, it has not really been below $8. Finally broke that level of support. So this is an apex investor kind of level of support where you'd like to enter at this price range, $6 to $7, which is what it was trading at today. It was trading, it closed at 782, and the price is 690, actually went below $7. So this could be a really good buy at this point in time. We saw it go down to $8. I'll take a look at this on Yahoo as well. This could surely go back to $13 at the very least. Could go up to 20, but you can double your money just on this one investment of HYLN. Want to take a closer look at their news to see if they are going bankrupt or what is going on with their price action here. Okay. Today, they were negative 11.7%, just about 12% there, down almost $1 to 690. They were trading between 675 to 730, and their 52-week range are right at the bottom, 675 to $30. So at minimum, I think this could go to at least 13, at least double. The volume was 11.8 million, so way above the average, and it looks to be leaning towards the oversold territory. This is an apex investor entry point. I want to evaluate whether this is an actual entry point. Looking at the last 6 months, 794 was the lowest that we saw. So is that really support, 794? Well, obviously it isn't, because we broke support. We broke 794. We're actually down $1. This seems to have flatlined over the last several months. It reached a high again of, let's just look back here. It was at $10 back in June of last year, went up to 27, went up again to 53 in September, went back down again, went up to 25, went down, went up to 20, just under 20, went down to $8, went up to 13. And now we find ourselves, that was back in June. So about, what's that, 4 months ago now? 4 months ago, we were at 13. So you could be waiting at least 4 or 6 months for this to go right back up to 13 or above. And so we find ourselves at the lowest point, 690, and that is even below that initial price of $10. So this is a really good price. I'm going to look at conversations. So there doesn't seem to be any press releases or any news catalysts that are moving this. Okay, an analyst from UBS has issued a downgrade of HYLN stock down to $5. And apparently, according to this commenter, they own close to 17,000 shares. So if they put out a sell recommendation, they're going to buy up some more if this is true. And so they're just basically manipulating the stock. They want to get this for really cheap and make a ton of profit when people, they give up on it, and then the stock goes up, they sell it high. So they're buying low, selling high. Those are the fundamentals of the stock market. So yeah, it's a great opportunity. I would buy this stock if I had some money to invest with. So TNX was down 10%. AM 25. Bitcoin is up at 57,000. So they're really threatening to get to 60 grand per Bitcoin. That's really good news for the crypto people, such as myself. Clover had a good day. They're at $8. Take a look at that. GameStop is at 178, and they're up as well. Canaan was up 7% at 672. So that's one of the only Chinese stocks I would invest in, and they're up. Mara is up as well, 42.96. So they're trending upwards. Just as Bitcoin is going up, they are going up. Now there's rumors that possibly could be true that China has banned crypto, specifically Bitcoin. I'm not sure if that is true or not. I can neither confirm or deny. SOS is up as well. It's the other Chinese stock that I am bullish about. And we'll take a look at these stocks in closer. What would you look to? Okay, so that's all. We're going to look at the 3 trending stocks in more in depth now, beginning with IronNet, the second stock that I own position in. Full disclosure, they are down 11.55 to 12.57, and volume was less than half. So is this support 11.55? Gonna take a closer look at that chart once it loads. Stock is flatlining as of late, but that is only showing you that there is fear, uncertainty, and doubt. So this is going to spike probably in the next 4 to 6 months. We'll see some movement upwards, probably going to right back to $20 at the very least, $20. But in the recent days, yeah, it is looking like support is 11.50, might be the very bottom, but we'll see. Time will tell what the actual level of support is. I'm gonna look at Clover next. Okay, so Clover 789 to 828. 52-week range was 631 to 2885. Volume was okay. It wasn't that great, but it wasn't horrible. It was below average anyhow. So yeah, the support is definitely $6 to $7. Still waiting for this to go down to $7 even. I'm going to look at the metamaterials preferred share and see how that was trading on the OTC markets. It's below average slightly. It was trading between 195 to 310. So it seems people are swing trading this. They're simply buying it at 195, selling it at 310, buying it again when it dips. So this could be an interesting day trader kind of trade. I can't confirm or deny whether this is an actual, the dividend itself, the rights to the dividend, I should say, but time will tell. I really don't know at this point. It's a big question mark, but again, when you lose sight of the big picture, you might be in some trouble. But let's get to the actual metamaterial stock itself and see how its day went. Okay, it loaded, so you can see the range for today was 535 to 578. So we're threatening to get to $6. And the volume was 7.4 million, which is roughly just above a third of the average. So let's look at this price action the last week and last month. Yeah, we are trending upward. It seems support is right around $5. Just 490, 486 is the lowest we've seen in the last month. And resistance in the last month was 643. So yeah, it is trending upward. Gone are the days of $280, $283. Seems that's a thing of the past. Looks like we're getting really close to the $6, $7 level. And once we get there, we could most likely get to the $10 level. So it's going to take a while. We're now in October. So I was predicting by the end of this year, December 31st. So we still have October, November, December, we have about just less than 3 months to see where the stock is going to go, but it's looking really good so far. We've been really steady and stable over the last almost 3 months, about 2.5 months. We've been really steady, regularly above $5 since September. Okay, I'm going to go to WallStreetBets and the metamaterial subreddit next. All right. Reddit. George did tweet twice today. It says here, according to analysts, counterfeiting has grown by more than 10,000% in the past 2 decades. It is estimated that more than $300 billion worth of counterfeit physical products are sold every year. Not only do these counterfeit products eat into profits that companies would have earned with the sale of genuine goods, but they also pose a threat to the brand reputation of original product manufacturers, especially as counterfeit products are often of low quality and pose harm to consumers. Nanotech thankfully offers a number of benefits. So I'm going to click on this image that he tweeted here. So yeah, it seems he's talking about counterfeit money, but I'm interested to see what this image displays. Okay, so this George tweeted, again, talking about counterfeit money, talking about counterfeit toys. Fake goods are found throughout many seemingly innocuous platforms. 2 out of every 5 are supposedly brand name products, but were actually counterfeited. Negative economic impact, and even cryptocurrency is at risk. So you have a fake cryptocurrency bank and a genuine one. So you should buy from the manufacturer, not over maybe some other website. But essentially, what Nanotech is offering isn't a way to deal with counterfeit products. It's really counterfeit bills, currency. Okay, I'm just browsing. Over is at the top here, as usual, but I've just had some thoughts running through my head, and the thoughts are these. WallStreetBets really, as much as I'm excited for the stock market and investing, it just brought it up, to 11. If I was a 10 out of 10, this brought it up to 11. Just made investing and stock trading cool. I also want to say that one of the most important things when you're looking at the stock market and looking to be successful in it is being able to identify the right levels of support, or I should say the true levels of support and resistance. And not only that, is also identifying which companies, which stocks are actual opportunities, which are the companies that have the most potential, have had a history of delivering too. And I think that that's what this channel is really doing. And I hope you'll see that in the future, in the next 6 months to a year and into the long term. Okay. I go to WallStreetBets practically every day during Monday to Friday. And every now and then you get a really, really good post. And this is what this post is right here. And it's TWNK. I'm going to read this for the most part, maybe not word for word. The bear thesis sucks, ding dongs, and shorts are scared of taking it up the brownie in Q3 earnings. This was posted almost a day ago now. Let's look at all the rewards it received. There's an odd saying, or an old saying in Tennessee. It says 2 in the pink, 1 in the twink. I realize none of you have an idea what the pink is, but you should all get familiar with the twink. The snack of a stock is currently undergoing a slow melt up caused by fundamentals, a steady quarters-long COVID-fueled turnaround, and more recently, a Morgan Stanley upgrade from $16 to $20 on September the 21st. Since then, it has ignored all indexes and steadily climbed from $16 to an all-time high of nearly 19. In addition to fundamentals improving, it appears short interest, established mostly in the sub 15 range at least 6 months ago, has decided to start the long and arduous task of covering a low liquidity stock. They probably made a big bet that people were as soy as them and wanted to eat healthier, and somehow COVID would be some sort of reckoning. Well, they ignored the fact the CEO has spent his entire career successfully shilling unhealthy packaged foods, and also ignored the fact that this is America, land of the free, land of the, land of the free. No, I can't say that. Home of the snacks. I think bears are now seeing their thesis sucks ding dongs, and they don't want to wait until Q3 earnings on November the 3rd to take it up their brownies. I like how you use these code words. The problem the bears have is liquidity. The 20 million shorted shares, or $400 million worth, would take 10 to 15 days to cover it 100%. Wow, that's a great. This guy's right. He's onto something. Even a fraction of that would move the price significantly. It appears it already has. The price has steadily been rising these past few sessions, and well estimated, short interest has been falling. I assume they are trying to get out before earnings. It's not the percent float that is killing them, it's the low liquidity. Well, yeah, the company is buying back shares at the same time. If that doesn't get your fruit pie moist, I guess it's actually a worse word than what he wrote. Consider this: the stock is low beta and low volatility. Wow, this guy is really a good salesman. Number one, anybody who shorted this would not have expected it to move up 30% within 6 months after opening their position. Number two, even though the share price has recently been climbing steadily at about 1 to 2% per day, it's kind of like metamaterials when you think about it. This thing has a really low ATM of 35%. Another 10% move in share price would print pretty well. A move to $20 plus would be multi-bagger for November options. If IV goes up, that's icing on the cake. Number four, it squeezed twice before on January 28th and early June. That sounds like GameStop and AMC, isn't it? Doesn't it? And both times it printed. The document below has a lot of words and graphs. Good sense of humor, this guy. Lastly, as far as I can tell, this thing has zero social traction anywhere. And now it's going to be changed because of WallStreetBets. I checked Twitter, FinViz, and StockTwits, etc. Nothing. To me, that means the likelihood of a rug pull is pretty low. That would also explain why the IV is low as well. The last two times IV approached 35% were preceding squeezes, with IV 30 spiking up to the 80. So I'll happily scoop up some options, sit around and wait for this to catch on, wherever the hell people talk about twinks. It's time to spread your honey buns and squeeze one out with your favorite twink. Number one, the likely bear thesis. I'm imagining it went something like this. Some overprivileged 28-year-old PM decides everybody is just like him and has spent COVID perfecting their homemade nut-based keto or an energy bar recipe and riding their Peloton. Everywhere I look, people are talking about healthier snacks, he thinks to himself while scrolling Instagram before nodding off to sleep. His dreams consist of 30-second recipe videos of trendy, healthy crap, and his days are full of listening to his girlfriend talk about all the healthy stuff she ate and how she now deserves some oat-based ice cream. Sounds good, oat-based ice cream. Together, they listen to podcasts about healthy food being amazing and how processed food is so bad for you. And that's true, it is. And it's somehow possibly racist. I think I've heard that too. At work, he tells his analysts to take a look at how to capitalize on health food craze. Look at, what's that, Beyond Meat, for example. It's time to do some good in the world and get rid of unhealthy processed foods. I find stats and surveys that say everybody wants to be healthier. Not true, but yeah, a lot of people do want to get healthier. Not everybody. And COVID was a reckoning for them to take care of your bodies. I mean, it kind of is in a way. They see that sales of $20 oat-based ice cream have skyrocketed. I don't know where to buy oat-based ice cream. I would if I knew where to buy it. With all the confirmation bias in place, he decides he must go long healthy stuff and short the unhealthy stuff. So they picked a company with a portfolio consisting of Twinkies, Zingers, Ding Dongs, and other stuff they would never touch. And I'm kind of craving Twinkies now because processed food is so terrible. Yuck. Who would put that into their temple? I mean, their bodies. Unthinkable, absurd. In the future, convenience stores will see how harmful these are and simply not sell them. They'll ban them, or people will do what they said they would do, which is eat healthier. What they didn't think about was who actually buys Hostess brand snacks. It's not the 10% of people that have the means and discipline to treat their bodies with respect. It's the 90% of people that indulge themselves, or they just want something fast and cheap. And they don't care about what is good or bad for them. They give their body what it wants, their stomachs. People that buy food from whatever is cheap and convenient, convenience stores. They certainly didn't think about how the genius CEO has decades of experience marketing unhealthy consumer packaged goods. They aren't just snacks to him, they are little bites of happiness. Why would you short happiness? Good question. Number 2, the company and the turnaround. Hostess filed for bankruptcy in 2012. Yeah, it's true, they did. It hit the news because people were dreading saying goodbye to their favorite cream-filled snack, the Twinkie. Private equity purchased the brands and they restarted production in 2013. They completed a SPAC merger in 2016 to go public. That was a very smart move on their, whatever, on their part. Their turnaround. A few key things have propelled them forward in the past few years. Number 1, a new CEO. In May 2018, they signed on Andrew Callahan as their new CEO. This guy's entire life was centered around packaged consumer goods and branding. Prior to Hostess, he was the president of retail packaged brands at Tyson. That includes Tyson, Jimmy Dean, Hillshire Farm, Sara Lee, Ballpark. Prior to that, he worked at Kraft. Wow, this guy knows what he's doing. He knows how to sling fatty foods to the American consumer. As a result, they've had 14 consecutive quarters of positive revenue growth. Okay, I'm sold. Like that alone, number 1, the new CEO knows what he's doing. Very competent guy. Pre and post COVID, COVID catapulted their business. Whoa. It turns out when people are at home all day, they tend to eat snacks a lot. Furthermore, as post-COVID traffic recovers, Hostess is seeing their single serve and convenience store sales, the largest share of sales, pick up. I'm going to buy some Twinkies tomorrow at a rapid pace. I saw them on sale too at Walmart. This trend is expected to continue. Ding dongs, ho-hos, whatever you call them, king dons. Man, guilty pleasure, those hostess snacks. Innovation, believe it or not, there's innovation in the junk food business. Really? With their Voortman Cookies acquisition in January 2020. Wow, they bought Voortman? Okay, I'm sold. Double sold. Hostess is creating healthier product offshoots under a well-respected brand. For their Hostess branded goods, let's go brand it. They're expanding into breakfast junk food, adding new flavors to their already iconic junk food. So they're adding breakfast into there. Wow. Creating limited time offerings of the junk food, expanding the channels by which they sell their junk food. For example, more varieties of single serve snacks. Love their brownies too. Number 4, good marketing and human nature. Although Little Debbie has pretty good brownies as well. Turns out people like sweet and fatty foods. Well, yeah, sugar's addictive. They like convenience. They like single serve, COVID or not. If they are told they are buying happiness, they'll buy more. Hostess also sells stuff healthier things under a brand they acquired in January 2020, again, Voortman, which is contributing nicely to their bottom line. Q2 earnings guidance, etc. Their Q2 earnings were arguably their best yet, showing double-digit CAGR rates for both revenue and EBITDA since Q2 2019. They lowered leverage from 4.3 to 3.4. They raised fiscal year 21 net revenue growth rate to 7.5 to 9% from 3%. Holy. This company is just good fundamentally. I won't bore you with the details. Most things are up and to the right. This guy is really good. Whoever this guy is right here. Great post. Find their Q2 investor presentation, Q2 conference call transcript, etc. Do your own DD on the company to confirm this. Here are two delicious slides from their Q2 earnings presentation. Hostess Brands, high margin, sustained growth story, snacking food, snacking focused with market leading iconic brands in sweet indulgent subsegments. Iconic brands, Twinkies, cupcakes, the Nets, Fortman, impactful innovation, broad distribution, efficient operations, scalable snacking platform. So adjusted net revenue. So this is talking about 2019, 890 million, 1.07 billion in 2021. And this year's not over yet. 196 million to 255 million. So increases, significant increases. Strong financial results ahead of peers. Adjusted net revenue, Hostess Brands, 10% gain, peers 5%, just doubling, and even 20% EPS, earnings per share, versus peers. There's seemingly still room for share price to appreciate. They trade at around 11 times EBITDA, with their mid-cap food peer group averaging 13 times. The very same peers they are poised to outperform by virtue of a ton of their sales consisting of single serve and convenience. Back to school and post-COVID recovery traffic will start coming down the pipe. Analysts are catching on. Morgan Stanley upgraded to overweight, a PT of $20. The seemingly kicked off a rally. I don't have access to their coverage. If you do, give me a holler. It says Morgan Stanley analyst Pamela Kaufman upgraded Hostess to overweight from equal weight with a price target of $20. I thought that was a pun. Up from 16, she assumed coverage of large cap packaged food companies at the firm Hostess, which she sees being positioned to benefit from tailwinds. I lost my spot. That include a shifting consumer preference toward more snacking, increasing consumer mobility, and potential revenue synergies from its Fortman acquisition. It is now her top pick. Wow, that is a shining statement there. Their share price has appreciated substantially, especially considering they are consumer packaged goods, which means low beta, low volume. So to move from $12.50 to 19 in under a year is quite a significant move. Any sensible party shorting this is probably thinking twice about their position heading into Q3 earnings. Again, do your DD on this. My take is they've turned stuff around. The price action, analyst upgrades seem to support that it is possible they've reached fair value already. I think there's still gas in the tank. I think he's right. Simply as a business, without WallStreetBets and without meme stockery, meme stocks and all that, this is going to at least 2025 just as a business. When you include WallStreetBets and the memes and all that can do for a stock, this could go to 30, probably even 40, 50. Could go to 100, but realistically, let's just say 40, 50. And that's again from 19. So yeah, there's a lot of hype into the stock, and it's justified too. Buyback. Page 27. In November 2020, the company's board of directors approved a securities repurchase program of up to $100 million of its outstanding securities. The program has no expiration date. The program may be amended, suspended, or discontinued at any time at the company's discretion and does not commit the company to repurchase its securities. As of Q2, they've spent 25 of that 100 million. My goodness, if they continue to buy back at that rate through Q3, that would put them at roughly 50 million spent and 50 million left right now. Wow. Okay, well, let's squeeze. The short answer, all signs point to it is currently squeezing right now, but slowly. Shorts cannot exit quickly due to low liquidity. They would prefer not to squeeze themselves. I think it will continue to slowly melt up until they hit a price point that provides enough liquidity to really cover a lot of their position. Now, this could all change overnight, or I should say within a week or a month, with all the buying pressure that might come from WallStreetBets. It's going to be a lot of volume coming in the next few days. I also wouldn't claim shorts are forced to cover. I think currently it is in their best interest to close out as much as they can below the worst case upward price action that earnings might cause. I simply cannot know if the shorts are distressed or not. I'm going to buy some shares of Twinkies. CTB is low. Utilization is low. So if they have the budget, there's plenty of wiggle room to survive a squeeze attempt. And the stock's only, what, $19, $20? It's not too much. Could get some like 10 shares here or there. A few more important things to note. It is supposed to be a boring stock, low volume, low volatility, low liquidity. Shorts would typically enter and exit positions very slowly and carefully. Shorts would probably only enter a position based on a bearish outlook of fundamentals and not much else. Catalyst 1. Fundamentally, companies doing well. COVID helped them. Recovery helps them. Q2 earnings crushed. Guidance was increased, as we saw. Catalyst 2, September 21. Morgan Stanley upgraded to overweight to $20. That's their prediction. I should say their new forecast. Catalyst 3, November 3 to 8, which is coming fast. Q3 earnings. Do they want to keep their bet through the print? Short positions are guaranteed underwater, given the low expected volatility. The current share price movement is well outside of norms. Shorts mark-to-market losses are likely edging on unexpectedly high. And with the fundamentals of the company vastly improving and Q3 earnings coming up, it may not be a bet that they want to continue shorting this. Utilization is low. CTB is low. They're likely not. Cost to borrow, I think that's what it is. Cost to borrow is low. So where's the other CTB here? Cost to borrow is low. Okay. They're likely not forced to cover for some time, but vastly prefer to get out while they can. Below is some analysis of the short situation. And this has really sold me, is this part here, smell. I periodically screen for smelly stocks. This guy should have his own channel. He's doing a really good job with this post. Masterful job. I periodically screen for smelly stocks that could see some interesting squeeze-like behavior. Twinkie has been smelly for a while, but it looks as though finally the catalysts for it have arrived. A fundamental turnaround, a PT upgrade, the price target. That's what PT is. I keep thinking, what is PT? It's a medical term. I thought it was post-market, but anyway, the price starting to move like crazy. It's a nice bonus that shorts seem to voluntarily want to cover as well. Anyway, I'll go over smell briefly. Short interest is S, 20 million shares, around 400 million all underwater, according to this poster, and I'm not going to give them the benefit of the doubt. Established between February and March, it's not super high percent float, and utilization and cost of borrow are low, but it is a large bet on the company failing based on fundamentals, which are very good. They're solid. Again, it's turning out to be wrong. They'll want to cover eventually. DTC is around time days to cover is 10 to 15 days at 100% volume. Let's say they go 20% daily volume and only cover 1/5. It's still a solid 10 to 15 days of covering. So the next 2 weeks are going to be interesting. Market cap, it's in the Goldilocks zone, small enough for retail to have an impact, large enough for notional short interest to be meaningful. Extremely Extremely memeable. What are you into? Snowballing, ding dongs, the mascot king ding dong? Do you like honey buns? How about giant honey buns? This guy knows what he's talking about. Are you into twinks? I think that's a derogatory term. So Twinkies. Do you like sticking things into fruit pies or brownies? Whatever you want. Hostess Brands has you covered. Yeah, it is extremely memeable. Low liquidity. This ensures shorts covering will impact stock price. A combination of low volume, high market impact, each dollar bought pushes price up a lot. Twinkie has a pretty low daily volume, especially considering the short interest. Gonna get into this tomorrow. That's how good this is. Low IV causes upside in the delta hedging aspect of the options chain. Vanna, what's Vanna? Vanna can vastly increase delta hedging obligation, e.g. if volatility goes up, market makers will buy more stock. Gamma will generally be high, quite high at the moment, providing an early boost. Also, low IV means you long volume for cheap. If a squeeze does occur, you make bank. Okay, all that just went in 1 year, went out the other. I don't know what the heck he was saying. So volatility goes up, market makers buy more stock. So this seems to be set up for a victory. So he's saying this is really primed for a launch, a rocket launch. So yeah, Twinkie checks all the boxes. It can fly easily. It's done so twice before already. Wow. So that's proof positive. This has squoze. This will squeeze again. Here's my breakdown. This is a 1-day squeeze on January 28th. Likely distressed books that got screwed over by other meme tickers at the time. The price spiked massively, slowly decayed, bottoming out 5% higher from where it started. Based on the current average loan, this is the accumulation zone for most of the short interest. This was during the second squeeze season, early June. So we're looking at late January, early June. Price went from 15 to 17.30. Stabilized. I wouldn't call that a squeeze, but okay, I'll look at that and more in depth. It's difficult to tell what's happening here. I trust the exchange reported short interest and assumed short interest is actually decreasing. Secondly, the Ortex on loan increasing as Ortex increasing their data sources. They eventually get to more on loan than short interest, which is what is expected. Third, there's a clear trend of shorts covering here. Q2 earnings bounce, the MS upgrade. The loan on loan starts to trend down. SI starts to tank. It's clear shorts are not covering or net covering. I don't know if he means net or not. The main takeaways from this are the following. On loan average was 150 days on July 6th, 210 on October 7th. This means the average loan date has shifted from early Feb to mid-March. Combined with the fact that short interest is decreasing, it would appear older shorts are starting to cover, but slowly. February, March prices were nearing multi-year highs at $15. And prior to that, it was a rocket ship up from COVID where it hit a low of $9. So the vast majority of the 20 million shorted are well underwater. How will they react to this fundamental shift? There's a long way to go before shorts are out of this. Since late August, estimated short interest has only dropped from 23 to 20 million, yet share price has shot up. Okay, short interest. So they had 23 million that are being shorted, and now it's only 20. So, but the price is going up. That means it's going to keep going up. Even if shorts cover only another 4 to 5 million, there will be significant price action. Short volume. You can also look at short volume, which has fallen off a cliff since early September. Okay, I'm going to kind of move forward a little. I see an overall trend of short volume decreasing. The question is, will it bounce back? A recent price action. Since September 21st, the stock has been on an absolute tear, hitting all-time highs. Okay. You might think stock goes up now. There are Twinkie fanatics sitting on the sidelines, buying in day after day, based on what Morgan Stanley says. The far more likely conclusion should be little g there, as supported by all the above, is the shift In fundamentals, and the stock hitting all-time highs is convincing shorts to capitulate or surrender and slowly cover before Q3 earnings in November. I spent this weekend learning Pine Script, which is really awful, just to make the cute little daily alpha indicator thing below. What this does is it computes the stock's beta relative to other tickers, SPY in this case, then plots the daily price action relative to the expected price action. For Twinkie, its beta is 0.4, computed using a daily look back of 200 days. So if SPY is up 1%, you'd expect Twinkie to be up 0.4%. You see a gray line each day, which indicates the expected price action. The blue line is price action for Twinkie. The region between those two lines is alpha. Okay, basically this shows us what amount Twinkie is outperforming the market. In this case, we use SPY. You can see Twinkie smash 3 sigma September 21, flirting with 1 sigma. The takeaway, Pine Script sucks. Twinkie is going up, doesn't care what SPY is doing. Also, it's probably from shorts covering, and there are a lot of shorts. Options chain. I don't get into options, but I'm gonna skip it. Mostly calls, hardly puts. It is bullish. Yeah, I don't get into options. It's too risky. Previous squeezes. As mentioned before, Twinkie has seen 2 squeezes before, and we can see them right there, according to this chart. January 28th, early June. Here's what happened after those dates. Seems like it continues going up. In both cases, the price spiked and leveled off and then settled way higher than when it started. Wow. Yeah, it is setting all-time highs. Be realistic. Shorts may not be forced to cover. If the share price rockets, they might hold for longer and wait for a better exit, particularly one that Q3 will provide via a lot of volume, or they may hedge with calls or something else. Realistically, there are 2 price points to consider. We'd be happy to keep shorting it at this price, even through the earnings. This is probably slightly above the price they think it'll end up at after Q3 dust settles. I have no clue what they think the price is going to be. It appears to be higher than the current price. Number 2, oh crap, the price blows up our account. I have no idea what this price is. It is a low volatility, low beta stock. It could be fairly low. However, I would not bet on it. I think shorts will cover slowly until they hit price number 1, which I think is still a ways up from here. High enough that the cheap 35% options will pay off. I don't think we'll hit price 2, although anything could happen. If IV gets jacked, it's possible they'll have no means to hedge and end up hitting price 2. This is a supposedly low volatility stock, so a spike upwards might not be well planned for. All that being said, I'm not banking on that happening. I haven't spent this much time on WallStreetBets since GME and GameStop. GameStop and AMC back in January. I think a slow melt up into Q3 is very likely. I think cheap options will pay off. I don't think it will maintain high price levels or high IV for very long. In these situations, fair value is eventually achieved. Yes, the shorts might pay their exit fee first, but that exit fee is finite. Positions. Yeah, I'm not going to read positions. Okay, so that seems to be options. I don't really go into that. TLDR. The bear thesis is that unhealthy, bad, and healthy, good. Hostess fundamentals continue to improve. Company making money. As a result, analysts upgrade and the stock prices hit all-time highs. Long-standing short interest seems to have started covering. They might want out before Q3 on November 3rd to 8th, but somewhere between then. The stock is low liquidity. So when they do cover, the price goes up. Stock is low, IV, so options print. Stock has squeezed twice before, both times printing money, but this time it's fundamentals driven, so maybe it'll print even harder. That's a good point. Not meme driven or hype driven. October, November calls up to $20 further OTM at your own peril, not financial advice. This is a great post. Okay, I'm going to look at TWNK and see how that's going on the stock market. Okay, so on the stock market here, was trading between 1841 to 1890, and the 52-week range $12 to 1890. So it is an all-time high. Volume was almost 3 times the average. So this post seems to have worked. Again, the beta is 0.65. This confirms what he's saying was true. Market cap was really good, 2.3 billion. And the earnings date is sometime between November 3rd to 8th. And what else to say? Yeah, the target estimate is 1963. I want to take a look at the last week. So this was posted, I believe, at beginning of the trading day on Monday. So we can see that there was a reaction to that post. It did go up. The last month, let's look at what true support is. Support's looking like around $15, $16. Last 6 months, that still stands true. 15 to 16 is your entry point for TWNK here, Hostess Brands. And even here in the last year, we can see 13. Yeah, okay, $12 to 13 is your expert entry point. Wow. So $10 is really a prime entry point, and that hit 1066 March 1, 2020, when all the stocks went down. It's been going up ever since, but slowly and steadily, slowly and surely. So he did mention that it squoze in January. So it was down at 13, squoze up to, according to him, it squoze to 15. I wouldn't call that a squeeze. And then it went up again in June, beginning of June, which it did to 16, but I wouldn't call that a squeeze. I call this more of a squeeze right now at $18. So entry points, expert mode, you're looking at 12 to 13. Hard mode, you're looking at 13 to 14. And normal mode, you're looking at 14 to 15. And then easy mode, 15 to 16. But I wouldn't get this personally above 16. So it is above 16. I do think that post is going to bring the attention of the shorts to be more cautious and more shorty. They're gonna be more short happy, and they're really gonna attack the stock now as a result. Maybe they might double down on their shorts. I don't know, because these shorts really have no moral compass. They'll do what they want to do. So this stock might be more attacked now as a result. Although, yeah, volume will come in, but we'll see. It's going to be a tug of war in the next coming weeks and months ahead and days ahead. So, yeah, I'm not going to buy into this stock. I'm going to track it. Most definitely, I will track this stock. I'm going to do that right now. Put that in GG there. So I want to be watching this. But HYLN is a better play at this point in time because it hit basically an all-time low. Hostess still has, yeah, it can go up. But if I were to buy this stock, I'll only buy a few. I won't buy too many. I'll just kind of wait and see approach to this. Next post is a controversial one. It's from WallStreetBets, talking about the V mandate, economic meltdown. So I want to look at this. It's kind of political, but I'm surprised this showed up on WallStreetBets. Got 1.9K upvotes. I was completely unaware of the issues with Southwest Airlines until late Sunday. If you don't know what's going on, Southwest canceled 1,800 flights over the weekend, leaving their customers in chaos. The company narrative is this is due to weather. However, some quick searching revealed that it's actually the pilots union that asked a court to block Southwest from enforcing the V mandate. An unusual number of pilots called in sick over the weekend. Coincidence? No, it's not a coincidence. There's also a story of hundreds of LA firefighters threatening to sue over the mandate, and New York expecting to have to call in the National Guard over nursing shortages. Without giving away too much personal information, I happen to work for a large employer that would fall under the federal mandate. I can personally attest there are enough employees refusing to take the V, and it will result in the shutting down of some critical operations. The market is already looking weak. Going into winter. Maybe economic disruption from vaccine protests. Oh, I said the V word. Will be what pushes it over the edge. So that is very interesting. Want to see. Quit it with the political stuff. You can make money without bickering. P&L will tell whether you're right or wrong. Reply to this comment with links to people being, they will get a ban. Am I too late to spy? Okay. I mean, we'll see what happens. It seems like, yeah, that is a reality that Southwest Airlines is going through that. So that is really interesting. Will it affect the markets? It might. I don't know. We'll see. So let's move on to metamaterials finally. Very long. I'm going to divide into two. So thank you for your support. Stay tuned for the next video. It's going to be all about metamaterials. This video was unexpectedly turned out to be the TWNK video, TWNK and HYLN. So thank you for your support. God bless you all. God bless your investments. And stay tuned for the metamaterials video coming up shortly.